There's an AI fintech IPO that recently debuted that you may not have heard of. OneStream may not be sponsoring F1 cars or running ads during the World Cup, but they're a leader at what they do. What is that? Well, let me put it this way. They say an accountant is someone who solves a problem you didn't know you had in a way that you can't understand. That's kind of how we might describe the world of enterprise finance. Now, to understand the finance department, I think probably one of the best shows would be the UK Office. Certainly, the US was quite a hit, but I think the original is probably the best. And in the background, you can see members of the accounting department there. For some reason, there's always some sort of romance going on because they're sort of a clique. You see Keith there, the stereotypical accountant. And when you think about people who work in finance, they say accountants love holidays because there's less traffic on the way to work. They work very hard. I don't bother asking them any questions if they're closing the books. We all know they work late for that. And nobody knows really what they do, though. Corporate finance, enterprise finance, finance and accounting, these are probably all labels for the internal finance teams that work in organizations. So we'll consider those synonymous terms. If you've worked in a large firm, you know who these people are. Everyone knows where they live because they have lots of important information everyone needs, and they're governed ultimately by the CFO, a certainly underrated role in any firm. Here you can see the complexity of the CFO role in terms of all the information they need to gather. And I highlighted a few of these points that are worth noting. Multiple ERP systems and instances. You'll find this often when firms acquire, and most larger firms do, and then they're stuck with inherited structures that take a long time to integrate your way out of. And they talk here about siloed data sources and repositories. Indeed, finding out where all the skeletons are buried is one of the challenges of acquiring a company. It takes a long time to get rid of these complexities, and firms never do. OneStream's vision is to be the operating system for modern finance, and here they do the classic chart that shows Salesforce is the cloud platform for sales, Workday for HR, ServiceNow for IT. And then for finance, there's OneStream. They say modernizing and transforming the office of the CFO. Well, fair enough. They described the opportunity as $50 billion, and here you can see what it is they do in a nutshell. So they consume an enterprise's financial and operational data and then turn that into various reports and functions that accompany the accounting of any large corporation. And when we think about the size of their opportunity, they put up this chart here, kind of like how they've pieced it together. So they say, first, there's a $10 billion opportunity in what they call legacy replacement. So that simply represents end-user spending on Oracle, SAP, SaaS, IBM, and Infor enterprise performance management and analytic applications. So we're going to look in a second at the various competitors, but then they go on to add another $40 billion, and here's how they do it. They look at the total number of companies in North America, Europe, and Asia, so pretty much all companies with 250 or more employees, and then they multiply that by their current run rate for existing customers, broken out a bit in size segments. So that's a bit misleading because only 31% of OneStream's revenues last year were international. They're predominantly a North American player, but at any rate, they calculate a $50 billion opportunity, and they talk about how they're well-positioned versus the competition. Now, when you think about firms, smaller firms especially, that have manual workflows, that might be a blue ocean, right? Because there's no existing solution being used. They say workflows that have not been digitized or are used to consolidate software outputs, so kind of duct taping everything together. I'm sure we've all seen this in startups and even larger firms. And they talk about legacy suites, so that you see the names there. That was the purpose of trying to calculate TAM using the $10 billion in spend those companies are getting. And then they talk about point solutions, and here's where they list some other more direct competitors, describing them as lightweight solutions that provide functionality for discrete use cases. And of course, that implies that they're a holistic platform. You see here this mention of AI-powered analytics, so that's quite important. When we first came across this, it appeared to be a company that was utilizing AI quite heavily, and indeed you go back and they were using it as far back as 2017. So when a lot of companies were using AI, that we were covering it back before it was the talking point du jour. So here you can see on their website trusted AI purpose-built for finance. So just some comments here. A superior corporate finance platform is probably going to provide value and succeed with or without AI. To what extent are they using AI for a competitive advantage? We're going to look at that. Revenue growth is always the ground truth. It shows that you're building something customers want. And the question, I guess, to ask first is who else is dabbling in this space? So there's all this opportunity to consolidate and remove all that duct tape. Who's working on this? And certainly can't all be legacy names. And here we pull up Gartner's Magic Quadrant. Always useful, I think, to get a picture of the competitive space, and you see names like Anaplan, so I believe they're owned by private equity, as was OneStream before they had their IPO. It's private equity seeing an exit. You see Workday, SAP, some familiar names there. Note that certain companies focus on particular geographies. So Board has majority European clients, so does IBM. And OneStream, I don't believe, tells us, I looked for it, couldn't find it, the breakdown of international revenues by geography other than the United States. They just say ex-USA. So if they're trying to go into Asia or Europe as a focus, then they're going to probably be met with different types of competitors. What's interesting is to look at Gartner's quadrant here. Financial planning software, and that label changes over time. But you see in 2018, OneStream there down below the leaders quadrant, and Oracle right there in leadership. And of course, today you still see Oracle leading along Anaplan and OneStream right alongside them. So OneStream's clearly gaining momentum. You see some comments here from Gartner. It serves clients in an array of verticals. Its top three include manufacturing, professional services, and banking, finance, and insurance. And OneStream enables its sensible ML solution through the AI services layer of the platform. This is important, which comes at an additional cost. So the question is, you got to be careful because some of these AI solutions most certainly are build it and they will come. And is this a solution looking for a problem? Well, if people are willing to pay for it, then it isn't, right? It's actually adding value. And in order to gauge that, we can look at things like net retention rate. Now, they say OneStream plans to release Gen AI capabilities in 2024. And this vague term through financially aware LLM interaction. All right, so you're going to see a lot of vague statements. According to Gartner, at least, here's what their competition's doing. So Oracle's releasing a cloud-based Gen AI finance assistant this year. This is all happening this year. Anaplan's adding AI conversational chat. Board has features based on Gen AI, including LLM technology foundations. Again, more vague terms. Workday, ML time series forecasting. So what it seems to be here when we think about OneStream in the context of AI, once everyone's using AI, nobody has a competitive advantage. You better be using it, otherwise you're not going to be competitive, right? Using AI to keep up with the Joneses doesn't really add value unless you're able to charge extra for your features. Then you've created value. But if that's the case, then your net retention rate certainly shouldn't be falling. Now, you're going to notice here in a second it's increasing for OneStream, which bodes well for their release of AI they're charging extra for. Features can be copied unless they rely on unique data sets. That's where the larger players in any domain are going to dominate because their AI functionality is better because it has better data. Larger the company, the better the AI algos. Ground truth, what sort of growth is OneStream seeing? So we've talked about what they do. How fast are they growing? Well, this table here we put together for a recent piece on the largest SaaS firms in the world. And the number 22% rings true in numerous cases. In this instance, it's McKinsey saying that in 2021, public SaaS companies with revenues upwards of $100 million had an average growth of 22%. So you see here the largest SaaS companies in the world. The bigger you grow, the more difficult it is to accelerate your revenue growth. So we look here at OneStream on the right, you see 34% growth last year. So they would be up there at the top. That's quite impressive when you look at the percentage there, subscription around 81%. They're guiding to 27% growth for 2024. So when you go and look at their quarterly revenues, you see here that growth is decelerating along the top there. You see that? And then you look on the bottom, you see subscription as a percent of total revenue has been steadily increasing over time. And on the right, you see that number, so their subscription revenues, how strong that grew from 2022 to 2023, but also it went from 70% of revenues to 81% of revenues. We've seen companies do this a fair amount where perhaps their old business model wasn't quite aligned with SaaS. So some PE firm gets a hold of them and configures everything into SaaS, gets rid of those perpetual licenses, and suddenly they're valued more. So when we look at this table taken from OneStream's S1, it shows the number of clients paying more than $250,000 over time and then greater than $1 million run rate. So that's useful to see these numbers climbing over time. It means more or less customers are paying more, so sort of a proxy for net retention rate. What's notable here is that 59% of their clients, they have around 1,400 clients, pay less than $250K a year. So it'd be nice to see some more granularity there. So speaking of net retention rate, remember I said it was going up. So stable at 116% from 2022 to 2023, and then upwards of 118% in 2024. Gross retention rates, so those are cancels more or less, 98% over the past 3 years. So they're making good progress as a SaaS firm. When we think about the potential for future profitability, here along the top you see their gross profit margin there on the left in gray, and then on the top there on the right in blue, software. So they're showing us there that software has much richer gross margins than services or license. Perhaps it's services dragging that down. But and we compare that to some of the top SaaS companies around. So that's at least their software gross margin is competitive and certainly attractive, as they all are at that level. And then when we look at free cash flow, so the way to think about a business is it's an asset that is valued based on its ability to generate future cash flows. That's so simple, and it's not so simple when you try to do those exercises as you do in B school, but it's really basics. This is what the cheerleaders don't seem to realize when they try to pump their favorite name, and that doesn't actually do any value or create any value. And here you can see free cash flow for OneStream. So it's gone positive, you see there, for the last 3 quarters, but it's not very consistent. We want to see some consistency there. Why? Because if they're generating positive free cash flows, they're not going to have to sell more shares or take on more debt. So that's very important. So it's a positive that they have positive free cash flows, but this volatility here isn't very appealing. Now, when we think about valuation, right? So when companies have an IPO, they often get quite heated. That's why we have a rule here at Nanalyze that says until a company has at least one filing with the SEC, we won't even bother considering holding that firm. You need to give it some time to mellow out. And with a current market cap of $4.8 billion and last quarter revenues of $118 million, we can annualize that. We get a simple valuation ratio of 10. So SVR, or simple valuation ratio, is just market cap divided by annualized revenues. You see the top SaaS firms here on the top there. I think CrowdStrike's significantly less since they're that recent debacle. Palantir is a lot more as the cheerleaders continue to pump a company that's growing right now at the more or less the average of what a SaaS firm ought to be growing at. You get a SVR of 10 for OneStream. What does that mean? Well, it's higher than our catalog average of 6.5. And here you could see on the bottom of this table what Workday, Intuit, Salesforce, more alongside the average of, I think we're calculating this for close to 200 names. So it's a little rich, but certainly you could argue that it has the growth potential to justify that valuation. Now, I didn't see any mention of retention rates in the investor deck for OneStream or their latest decks, just the S1. So they probably want to put some more visibility around that. The same for account size stratification. I don't want to have to look in the 10K. I mean, this is something that typically SaaS firms will put on their decks and provide visibility around. TAM seems on the smaller side. So you have $10 billion from legacy replacement. That's not a given at all. You need to displace those firms. And of course, there's some blue ocean there with people that are duct taping things together, not seeing AI providing any sort of superior advantage. To be honest, everyone's doing AI now. There's enough to like here that I think we can add this to our tech stock catalog as a fintech stock. Now, briefly to touch on AI IPOs. So this OneStream name came up and we sort of were kicking it around because it talked AI, but it didn't look as much AI as perhaps these names here we've covered in the past. So they straddle the fence. The broader use case for OneStream, I think, is more interesting than their AI components, which is this fintech platform that all firms can use. We'll be quite critical going forward about what qualifies as an AI IPO. And I think a good video to watch next is this one on the 10 biggest SaaS firms. So some of the charts from this presentation were taken from that. It's quite good. Give that a watch. Thanks so much for taking the time to watch this today.